Okay guys, I'm going to go to the Answers Hub and I'm going to pull up a question for Jack based on overstretched markets and how to stay out. Now this is really important, so stay tuned. Let's roll the intro and we'll get into this. And a warm welcome, one and all. So overstretched markets, what are they? Are they dangerous? Can they be traded? Well, the answer is yes, they are dangerous, but yes, they can be traded with common sense. Now, the Answers Hub, for those who don't know, it's a section of the Scruffy squad that I have where the guys just ask me questions. Now, what I'm also going to start doing is let you guys ask questions. I'll put it to a poll and then I'll address it in a coffee with Scruff. Now, this sort of thing, I think, brings value for you because that's what I want to try and do with the channel moving forward. I wanted to bring value, and the only way I can do that is from you guys. I kind of forget. To me, it's second nature. I've done this nearly 2 decades, and it is difficult to sometimes see what you guys want. Don't get me wrong, I'm not going to give away my secrets. You know, it's that simple. You know, and I'll be brutally honest about that. You want to see it, come in the squad. You want it for free, fuck off.
Jesus Christ, dude.
It's that simple. Because there is no free rides in this world. Zero. And I've got no time for anybody who thinks there is. So that's half my subscribers gone. Bye all! But if you do think that you want value, subscribe and I'll try and teach you the journey as long as you're willing. That is a big thing. Now, you'll hear me say that quite a lot, and a lot of people won't like it, and quite frankly, I don't care. So, let's get into this. For Jack, his question is excellent. It is really good. Overstretched markets. What criteria to use to stay out when price is potentially gone too far? Well, the first thing that you want to be doing is eyeballing the chart. Can I see that this thing is rattling away? Well, you can, because you'll see overextended candles and things like that. So first criteria is something like this. Now, this is pretty relevant chart. It's recent, you know, it's last week. Overextended candle. Can the market continue to go? It can, but it's more likely to come back on itself. Why? It runs out of momentum. Now, this can be recognized in 2 ways. It can be a collapse of a Bollinger Band and it can be an overstretch of an RSI. The middle bit, MACDs, etc., you can just take them out of the equation. Why? They're just a general view of the market and they are too lagging. But your RSI, and remember there are 3 settings to an RSI. You can have a fast setting, which is a 5, similar to a stochastic. Standard setting, which is 14. Again, it's a bit too lagging. But then you can have the slow down for swing trading, which is 28. You've got to have the right setting for the right criteria of what you're looking at. So if you're swing trading, you need to slow the thing down. And you can look at the overstretched position at that point because it's multiple days. If you're day trading, you need to speed the thing up a little bit so you can see what the now is. Because during the day, it's going to move up and down. But then you also want to be looking at it on the right time frame, which is the hour. And depending on market, sometimes it's the 4 hour. And that's based on the ATR. But in the squad, in the modules, I explain how that all works. Now, your time frame is incredibly important. So whatever your anchor is, that's what market you want to be, or the chart you want to be looking at to see if it's overstretched. If you're looking at 5-minute charts and 1-minute charts, thinking the market's overstretched, you're in cuckoo land. Because you can't see it. It's too condensed. It's too narrowed in. It's not telling you what the market's up to. And I've seen lots of queries this week about failure rates in this industry. That's why. Because you're looking at the wrong thing. You need to see the bigger picture, understand what's going on. And if you can't see that, you're wasting your time. In fact, I'm going to do a coffee with Scruff against ROI and RR. And I'll touch on coffee with Scruff for just a second, and then I'm going to get into this. What I want to do is across the weekend, I'll go in the YouTube community and I'll just ask a question. What do you want in coffee with Scruff? I'll let it run for a couple of days, and then all the queries I'll put in a poll, and then you can vote on which query you think is best, and then I'll do a coffee with Scruff on that. If that's a good idea, drop it in the comments and I'll get that started for this week, because we're coming into September, new month, new sort of way of doing things. I want to push this channel forward and I want to make it viable. It's always been a hobby for me, but now I need to justify the time, and the way I want to do that is give you value, and then that value may turn into something. I don't know. It all comes from you. Or on the other hand, drop in the comments and say you just don't want me to do it. See how many of you do that. You say, no, don't want you to do any more videos. Don't want you to do anything. We don't like what you do, which is fine. And I'll just give up, because it won't bother my financial status one way or the other. I do this because I enjoy it and I connect with a load of guys that I think are really good. So you tell me, should I continue or should I quit? If you want me to continue, what do you want me to talk about? And we'll carry on. So, getting back to this. See, on this channel, you get none of this with any of the other YouTubers, because they'll tell you, oh, just follow my system and you'll be a gazillionaire.
I'd buy that for $1.
Well, I'm telling you to sod off. And there's a change. Oh, no.
Oh, here we go.
No, talking of things to sod off. No, you're not to sod off. You're the hawk. She's good at hawk, boy. Yeah. She doesn't know what it means, but I do. But she did it at the weekend, so good girl. Well done, girl.
Daddy's home.
We had a great time in Manchester. Well, sort of a great time. Finney turned up and decided to hit the bar like it was going out of fashion. Yeah, and we stayed in the bar when he went home and paid for it the next day.
I'm drunk. You're drunk. Everybody's drunk.
Anyway, carry on with this. How can we see an overstretched market? There's multiple ways of doing it. And what you'll find with this channel for new people is I sometimes fluff all the beginning to get rid of all the freeloaders, because I know they won't stick the course. They just want a free ride, and if they can't learn it in 5 minutes, they're not learning it. Well, I'm telling you, if you think you're going to learn it in 5 minutes, I don't want to know you. Sling your hook, because you're never going to make it. I'm upsetting people again.
You always are.
Well, it's not so much that. I've just switched my emails on. There's a load of shite. And they do set me off at times.
You were literally too stupid to insult.
I'm almost on one again. I'm almost on one. Do you want to do a hawk?
Ow.
Yeah? Go on.
I bet you forget what you're talking about. You?
I have. I was all excited. Right. We shall begin. Overextended candle. As soon as you see one, the chances are the market will stall and reverse. Why? It runs out of momentum. Now, there are certain criteria you can use that can see that. First of all, it's the candle itself. Soon as that comes up to here, you're looking for locking points in a Kylie. And I'm going to touch on Kylie as well in another video, but just for the guys. It's the difference between a Kylie and a golden eye. Kylie is something you use to find ratios, okay? Now here, it wouldn't have locked in, so it won't have locked it in. So you move your Fibonacci up to the next section. It doesn't lock it in. Even though the tail came down, it didn't. And you follow it up till eventually it does lock in here. And then what happens? It hardly looks back on itself and it collapses. So first of all, you could use that for a reversal trade. The problem with doing it on its own is you might get clipped into the trade because momentum is still there. So you need to apply other elements. So first of all, you look at this. Okay, that's stretched to buggery. Is there anything in here that can tell me that it's still going to be moving? Well, there is. So first of all, it's the Bollinger Band. It is flaring outwards. Still strength there. So therefore, that means this level, if it breaks over, which it did on this candle, may well run to the very next level, which is here. And it did. Now, these levels were put in place with the guys way before this video was made, so they know exactly where they are and where they came from. Now, here we can see a stretch point. So you also know that momentum's running out. Now, until it comes back into range, that momentum is still there. So again, it's pushed over, flaring. This may well keep on going. So you are holding to this level. When it got up to this level, there's some other criteria we can start to see. We can see that it dipped down and tried to come back into range. Momentum is waning and possibly going in the opposite direction. So first clue. We have a solid level. Second clue. But then we have something that tells us that this momentum is closing off. How do we know? Because the strength is running out. Bollinger Band is pushing up, but it's actually collapsing on the other side. The doors are closing in. So what we do know, because these levels here are all of high time frame, not the paper thin 5 minutes and 15 minutes and 1 minute that most of the dickheads tell you about, never mark a chart on 15 minutes. You're wasting your time and you will lose. You need high time frame levels with substantial reason as to why they're there. None of this, if it's touched it 3 times on a 5 minute chart, it's a great level. No, it's touched it 3 times on a level on 5 minutes because it's waiting to move to the next one, which happens to be something like a daily or a weekly, something like that. The 5 minutes means jack shit. The amount of touches means jack shit. What you need is a clear turn in the market. Definitive turn. Not touches where it's just thinking about it. Definitive turn. You haven't got a definitive turn, you haven't got a level. It's that simple. Right? So it comes up. Levels in place. Right. What are we looking at this point? Right. I'm at a level. What are my clues? I know it's overstretched and I know the momentum was starting to shift. Because it's not getting any higher, it's actually coming down. Okay, it's still over the top, so I need something else. It's the collapse of the Bollinger Band. As the strength is running out, it means that level will hold. And sure enough, touchy, 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 doesn't mean to say it's a great level, just telling you it's the right area of value. And if you were to start buying at this point, be stupid. So you have a couple of choices. You either wait for the market to relax or you counter trend. And if you're going to counter trend, you then do what I always tell you guys. Look at the target and situation. If the big trend is up and you know this is a stall point, you have to be careful with your target going the opposite direction. So what do? You go, well, I've got a level here. I've got a level there. I would only target into the lower level. And sure enough, down you come. It's not a big move, but there's enough money inside there to do you a decent day's wages. And then what did it do? It did exactly the same thing. Came down to level, pushed through, still had momentum in it, blah, blah, stayed in range, pushed up, bang. When it came down here, hit the level, overstretched. How do we know it's going to reverse? The top collapsed in. And there it is there. As it came in there, came back to range, and then it started to slow off going the opposite way. And sure enough, it started to rise as the momentum started going in the opposite direction. So what you're doing is you're looking at a combination of elements. So you're looking, first of all, when it's at the level, how likely is that level to hold? Well, if it's still got strength and momentum in it, probably not. You then look at the one above it or below it, depending on your direction. If the momentum has run out, fine. There's a chance that if it is going to push through, it's not going to go far. So that's where a golden eye situation would come in, and the guys know where we draw golden eyes. And if the strength has run out as well, because you can see the Bollinger Band shutting in, then it's definitely going to hold. And then you either counter trend or walk away till the market is relaxed. Very, very simple process. So hope that helps, Jack. We'll touch more on that on Zoom calls and Q&A. But this is a taster of roughly what I'd be looking at. So as always, do what you love and the money will follow. See you all next one.